Welcome everyone to my new video. Thank you to everyone who participated on my Facebook poll. I will be answering a lot of your questions and possibly many more. So please stay tuned and hopefully you'll find this video very useful. Hello everyone and welcome to a new video. As promised on my Facebook feed a couple of weeks ago, I'm going to be answering a few of the most common questions that you guys have had from the poll and some that I have had in the past that weren't included in the poll that I did on Facebook. So please stay tuned. Hopefully you'll find this video very helpful. How much you can borrow? Was a very common question that happens all the time. How much you can borrow actually depends on a few factors, including how long you've been working, how much you're earning, your income, liabilities, dependents, living expenses is a very big one at the moment. A good place to start is actually go onto a website, go into your bank's website and see how much your repayment will be. It will give you an idea of how much you can afford. It's not usually an accurate figure on exactly how much you can borrow, but it will give you an idea. How much deposit do I need for my first house? Again, a very common question from first-home buyers. Ideally, you'll need 5% deposit. When we say 5% genuine savings, it's 5% the value of the property that you want to purchase. So if you want to buy a house for $400,000, you need $20,000. What it means by genuine savings is that you need to show the bank that you are actually able to save money. So you need to show that the bank that you have actually been saving those $20,000 or 5% for at least 3 months before you can actually apply for a home loan. This is good for you because you can show the bank that you're able to save and also gives the security to the bank that you are a responsible borrower. Another thing that I forgot to mention before, in WA we are very lucky that you can actually buy a house depending on a few things with 1% genuine savings through a government lender. If you want to know more, please let me know. I don't want to go into products too much because not all products are suitable for every customer. So let me know. We can have a more personalized discussion. How much should I borrow? Well, that's also a very good question. Obviously, the least you can borrow, the better for you, because banks make a lot of money because of the interest that they charge you. The longer and the more you borrow, the more money the banks make, which means that you've paid more money. So the bigger deposit you have, the least you can borrow, the better for you. First home buyers usually will have to borrow 95% the value of the property unless you have a guarantor. That's another question that we can answer after. Is there any fees for my services as a mortgage broker? The good news is no, there is no fee for my services. I actually get paid a commission from the bank that we pick for you. So my cost to you is actually free. What bank is the best to lend with? Again, that's a very good question and I get that a lot. There isn't such a thing as a best bank. The best bank for your situation really depends on your situation. You may find that your current bank is, you can go talk to them and they'll tell you that they're the best bank, but in reality all banks have different policies. So unless you want to go ask questions to 10 different banks to find which one suits you the best, this is why you would engage in the services of a mortgage broker, because they can tell you straight away this bank is the least unsuitable for you. But yeah, there's no a real answer for that because all depends on your personal situation at this moment. Is there any upfront costs of buying a house? There can be. You want to get a building or pest inspection, and pretty much mandatory when you buy a house. It will protect the bank because they're taking your property as security, and it will protect yourself as well to make sure that that your house is not going to crumble a couple of months after you bought the house. So that's one of those. Will probably cost you about $400 to $500, and the pest inspection will cost you about $300. Some banks also will have an application fee. It's not uncommon to do it. A lot of banks do waive those application fees, but again, it depends on the bank that we choose for you. One of the big ones and one of the common ones, especially for first home buyers, is lender's mortgage insurance. Lender's mortgage insurance anytime you borrow more than 80% the value of the property, you pay lender's mortgage insurance. Obviously, the more you borrow, the more expensive it is, and it covers the bank in case you default. It doesn't actually cover you. So if you can avoid it, great. Again, it's not absolutely evil. If you pay once, it's okay. If you pay more than once, there has to be a very good reason for that. Okay. What's the difference between variable and fixed, and which one's best for me? Variable interest rates, like it says, the rate can vary depending on how the market is. So it can go up or down. At the moment, the trend is down. However, that doesn't mean that it's the best for you. It all depends on your personal situation and what your goals are. So on a variable interest rate, it's very flexible. So you can actually, the rate is not set, so it can go up or down. You can usually you can make extra repayments on a variable interest rate without any penalties. So you can actually smash the loan if you want. You can pay as much as you want whenever you want. Any extra money that you have put in there is saved to the withdrawal. You can actually withdraw. So you can use your home loan as your savings account, which is actually more beneficial than having a savings account. However, the repayments can change whenever. So even though the repayments are trending down at the moment, they can actually go up. On a fixed rate, if say for example you fix it for 2 or 3 years, you know that your repayments won't change, either going up or down during the fixed rate period. So you can actually budget for that. So it suits you if you're on a budget and then you know that your repayments won't change for the next 3 years, you can actually expenses around your mortgage repayments. They're not as flexible though, so if you want to pay extra, some banks will have a limitation on how much you can pay extra. Well, most banks will have it, and depending on the bank that we pick, depends on how much you can actually repay extra. Usually they don't have an offset account. No one has asked me what an offset account is in this video, but if you want to know, I can let you know what it is. Also, if you say, for example, if you're not happy with the bank that you're with, and in 2 years you want to move, and you're still on a fixed rate period, it can actually be very costly to try to move banks while you're still on a fixed rate. On a variable interest rate, you can move whenever you want. Usually, you don't want to move within the first 2 years of your loan being there, just because there are costs involved with moving, like discharge costs, government fees, things like that. What is a split line? Basically, you don't need to have everything fixed or everything variable 100% of the loan. So if you have a loan for 400,000, you can actually have some fixed and variable. If you want, you can have both, the best of both worlds. You can actually have, if you wanted to, you can have 200,000 fixed, 200,000 variable, or 300 fixed, 100 variable. Whatever split suits you. So you can actually enjoy being able to pay extra repayments on a variable rate while having the peace of mind knowing that in the fixed part your repayments won't change. That's basically it. A split loan is a split between variable and fixed. What is a guarantor? A guarantor is a family member, usually your parents, who can actually give you so the question coming. They can offer the bank extra security, so you don't have to pay lender's mortgage insurance, for example. They need to have enough equity on the property. It helps you so you can get into your loan quicker without a deposit. And the eligibility for the guarantor actually depends on bank to bank, but it has to make sense. So again, that's something you need to discuss with your bank or mortgage broker. Next question. Can I get a home loan if I'm self-employed? Of course you can. Being self-employed gives you a bit of freedom in regards to your income. Let's be honest, and sometimes how much you can declare. But it comes with a bit of frustration as well on how much you can actually prove to a lender. So if you can prove all your income, you want to buy a house, well, it all comes with evidence. If you can evidence 2 years of self-employed income, so if you have had your ABN running for at least 2 years, and you can present at least 2 years worth of tax returns, in some cases less, you can actually apply for a normal home loan with the normal eligibility criteria. But what if you're not declaring all your income and you can pay more? There is a product called a low doc loan. So what is a low doc loan? A low doc loan, home loans available for borrowers who can supply the amount of documentation that's required for a normal credit assessment. So they ask you for a little bit less. Obviously that comes with a higher interest rate because it's higher level of risk for the bank, and you also usually need to come up with a higher deposit as well. But you can get a loan being self-employed. Why should I use a mortgage broker instead of going to my own bank? Well, the answer is quick, and I can probably go into more detail on my next video. But the answer really is choice. I have worked with banks and for banks for a very long time. As a bank lender, as a mortgage broker, we both have the responsible lending responsibility, but as a broker, we also have a responsibility of always acting in your best interest. Therefore, we have to choose a bank that is always in your best interest, and we have a choice, usually 20, 30 different lenders in one panel that can give you the choice. When you work with a bank, it might be the best bank for you, maybe not, but they can only offer you those products that they offer within the bank. So they cannot act, not because they don't want to, but they cannot act in your best interest because they can only give you the choice of products that they have and nothing else. So again, I don't want to seem biased, but when you go to a mortgage broker, say for example you bank with Bank A, you can go to Bank A and it might be the best one for you, or it might not be the best one for you, but you won't know because you haven't actually seen other choices. When you go to a mortgage broker, you can say, I'll bank with Bank A. Or I say, well, we have options of Bank A, B, and C. Bank A offers you these products, Bank B offers you this product, and Bank C offers you these products. Because of your situation and because it's not unsuitable, I say we go with Bank A. Again, same bank that you bank with, but you don't know the other choices until you actually speak or look at all your options. Plus, like I said before, it doesn't cost you anything to do that. The broker actually does all the work for you. Well, that's it for this video. Thank you very much for watching the whole thing. I will be posting another video on why using a mortgage broker versus going straight to the bank. Make sure you subscribe to this channel. There will be a lot of tips how to pay off your loan quicker. Why is the structure more important than rate? That's another one. Banks put a huge emphasis on interest rates, but what if the product offers the rate is not the best for you? That's one of the videos that we can probably do in the future. Okay, let me know if you have any questions. Put it all in the comments. Don't forget to subscribe, and we'll see you in the next video. Bye.